Okay, so you have okay. Today we have. Can you see the PowerPoint?
Yes.
Yes.
Yes. Okay.
Yes.
Okay. Thank you. So what you have today is we have the business risk. Okay, the companies. Okay. And so we have a company here. Okay. Company. So this is a company, eh? So company will face a variety of risks. Okay. Okay, but we just focus on the business risk here. Business risk where we have looked at to the definition just now when the company fail to achieve its objective as well as fail to execute its strategies. Okay, so business risk. And another risk that will involve, okay, when regarding the preparation of the financial statement of the company is audit risk. Okay, audit risk. Okay, business risk. Okay, business risk is the risk that caused by the clients, and audit risk is risk that the auditor should look into. Okay, so this is from the auditor's perspective. Okay, this is from the business or company's perspective. Okay, because this risk is controlled by the company, this risk normally, okay, the auditor will look into, but not all the audit risk will be bad or will be controlled by the auditor. Okay, so we will look at actually what is audit risk. Okay.
Okay.
Okay. Audit risk. Okay, audit risk. Okay, is the risk that the auditor give inappropriate. Okay, inappropriate.
Bunyinya dia bunyinya tak ada.
Inappropriate audit opinion when the financial statement are materially misstated. Okay, and then the risk. Okay, the risk that the financial statement contain a material misstatement, okay, is inherent risk and control risk, and the risk that the auditor will fail to detect material misstatement is detection risk. So, what is actually audit risk? Here, audit risk is when the auditor reach incorrect conclusion. Reach incorrect conclusion, okay, on financial statement. Okay, when the financial statement are materially misstated. Okay, so that is audit risk. Okay, business risk is a business when the company fail to achieve their objective. Okay, audit risk is auditor's risk where the auditor reach incorrect conclusion on financial statement when the financial statement are materially misstated. So that is a different thing between the business risk and audit risk. Okay, business risk and audit risk. Okay. So when we look at to the risk, okay, we have you as an auditor, you have to carry out a financial statement risk assessment. Okay, risk assessment, okay, which help the auditor ensure the key areas more susceptible to the financial statement are adequately investigated and tested during the audit. Okay. Okay, so it also help the auditor identify low risk area and also high risk area. Okay, so in this way, auditor will follow the risk-based approach to audit. Okay, just now you have looked at what is the risk-based approach. Apa dia risk-based approach tadi? Okay, where the auditor analyze the risk associated with the client business, transaction and system. So first they have to understand the client business and industry. Then they have to understand their information system and they have to perform their test. Okay, that is the risk-based approach. Okay, and the and another one when you auditor, okay, investigating and perform the test, okay, you are not only concerned on the routine transaction. Okay, auditors are therefore not concerned with individual routine transaction, although they will still be concerned with material non-routine transaction. Okay, material non-routine transaction. Okay. So actually, okay, audit risk is the auditors express in appropriate opinion. Okay. Okay, when the auditor express inappropriate opinion when the financial statement are materially misstated. So, okay, this is the function of the audit risk material misstatement and detection risk. So under ISA 200, okay, express inappropriate opinion. Inappropriate opinion when the financial statement are materially misstated. So audit risk is a function of the risk of material misstatement and detection risk. So what does it mean is, okay, when we talk about the risk here, yeah, risk. Okay, audit risk, Okay, audit risk. Audit risk equals to the inherent risk times with control risk times with detection risk. Okay, inherent risk, control risk, detection risk. Okay, we know just now that audit risk is when the auditor give inappropriate audit opinion. Okay, inappropriate audit opinion. Okay, when the financial statement are materially misstated. And you have to look at Okay, how or where the risk come from? Okay, kenapa auditor boleh bagi pandangan yang salah? Okay, actually when the financial statement are materially misstated, auditor should modify the report. But yet here, okay, when they know the financial statement are materially misstated, but the auditor still issue the unmodified audit report. So that is what the audit risk mean. Unmodified audit report issued when the auditor can know that the financial statement contain material misstatement. So what is the sources of the risk? Okay, the sources of the risk will come from the management itself. Okay, management and auditor. Okay, faktor yang menyumbang So what are the contribution to the audit risk? So it might come from the management and it come from the auditor. Okay. How I said that? So you have to know that when when the company prepare the financial statement, okay, just now here, okay, the company prepare the financial statement. Okay, they company prepare financial statement. Okay, it come from the risk yang involved at the beginning tadi, business risk. So when they have a business risk, like in the current situation, so in this current situation, okay, it cause of the pandemic, okay, COVID-19. So economic will be slow. Okay, or down. So the effect is they might have revenue might be reduced, okay, sales will be reduced, and the possibility of the error in preparing of financial statement is higher. Okay, possibility of fraud. Okay, so this is the situation due to the business failure, okay, or business risk. So when business risk happen in the company, it will affect the nature of the business. Okay, nature of the business as well as they might not have a good internal control system. Okay, not have good internal control system. So this is the nature, okay, due to the company itself, okay, as a result from the current situation, okay, faced by the company. So when they prepare the financial statement, the company is the person who prepare the financial statement. Okay, prepare the financial statement. So when they prepare the financial statement, okay, here they will contribute to the inherent risk and control risk of the company. So this is risk, okay, risk on financial statement. Okay, risk on financial statement. Okay, that is called risk on material misstatement. Okay. Who have a control on these two risks? Okay, the management, because the management is the person who prepare the financial statement. Okay. So then, who will use that financial statement to investigate? So tadi in the risk-based approach. Okay, risk-based approach here. Okay, the auditor analyze analyze risk associated with the client business, transaction and system, which could lead to the statement in the financial statement, and direct their testing of risky area. Okay, so this is the meaning of the risk-based approach. Okay, so in other words, you said that risk on financial statement will appear during the company prepare the financial statement. So this risk will contribute to the audit risk. Okay, these two risks, inherent risk and control risk, will contribute to the audit risk. So, and we have another risk that controlled by the auditor. So since the auditor just now is investigating, okay, and perform the test, this one, which could lead to misstatement in the financial statement and direct their testing to risky area. So audit conducted in accordance with ISA must follow the risk-based approach. So who conduct the test? Auditor, right? So auditor will conduct the test. So the detection risk is when the auditor fail to detect the material misstatement, okay, in the financial statement. So that is considered as this detection risk. Okay, so who contribute the detection risk? The auditor. Who control the detection risk? The auditor. Okay, who control the inherent risk and control risk? The management. So we will look at what is the definition of each of the risk contributed to the audit risk. Okay. Any questions, class? Do you understand? Understand or not?
Yeah. Understand.
Yes. Okay. Good. So now we go to page 85. So what is actually the audit risk talk about? Okay. So audit risk is the risk is the risk that salah hari ni dia tak jadi. Okay. So audit risk, okay, here. So this is the model for the audit risk, audit risk model. So audit risk equal to risk of material misstatement times detection risk. So as what we discussed just now, audit risk, okay, audit risk equals to the inherent risk times control risk times detection risk. So risk of material misstatement is a combination of inherent risk times with control risk, okay, because these two risks is involved, okay, or is come from the risk when they prepare the financial statement. Okay, who prepare? The company. Okay, and then the auditor here is come to detect any misstatement in the financial statement. So when the auditor fail to detect the misstatement, so in the financial statement because of the wrong audit procedures, so that is called detection risk, where it is controlled by the auditor. Okay, so that is the meaning of two separation of the audit risk model here. So audit risk equals to risk of material misstatement times with detection risk. So the risk of material misstatement arising in the financial statement is dependent on the entity, dependent on the entity. So means that it's controlled by the management. controlled by management or by the company. Okay, and then cannot be influenced by the auditor. Cannot be influenced by the auditor because the auditor is not involved, or the auditor is independent from the preparation of financial statement. So it is a product of inherent risk and control risk. Okay, whereas the detection risk is dependent on the auditor, and is the risk that the auditor will not detect a material misstatement in the financial statement. So auditor's failure here. Okay, auditor's failure. So actually you have to know what is a definition of inherent risk. Inherent risk is the susceptibility of an assertion. Susceptible means openness of an assertion to a misstatement, and that could be material individually or when aggregated with other misstatement before consideration of any related internal control. Okay, means when you look at to the misstatement, okay, due to the inherent risk ni, you have to look at it individually or when it aggregated with other misstatement. Okay. What is the example? Okay. Inherent risk is the risk that item will be misstated due to the characteristic of those items, such as the fact that are estimates or they are important items in the account. Okay. What should the auditor do? The auditor must use their professional judgment and all available knowledge to assess inherent risk. Okay, no such information or knowledge is available then the inherent risk is high. Okay, what is the inherent risk factors? Okay, when you assess or when you investigate on the inherent risk of the company, you have to look at to many factors. Okay, affected the inherent risk. First, look at to the nature of the entity. Example, the industry it is in and the regulation it falls under. Okay, the industry it is in and regulation it falls under. So in the case of COVID-19, okay, the COVID-19, so not all industry will be affected. So when you audit the company which are affected by the COVID-19 pandemic, okay, especially for the construction company. So where it under the regulation of government, it said that okay, all construction company cannot proceed with their construction except for the certain situation. Okay, certain condition. So most or majority of the company will be affected. Majority of the construction company will be affected by the regulation, and its industry it is. So where no manufactured company in cement is allowed to open. So it will affect in terms of their progress of construction, as well as the payment of workers and so on. So that is because of the entity, the nature of the entity. Okay, and the attitude and experience of management. So if the attitude and experience of management is not good, the management involved in the wrongdoing, so that is also inherent risk to the company. Geographic spread of the operation. So you look at to the nature of the business. Okay, in the case of pandemic, most of the restaurant, okay, in KL, especially those operate in the shopping mall, okay, close their business because they're not able to maintain their operation anymore. So that is in terms of geographic spread so of the business. Maybe sebelum ni, before this, they have 10 sub-location of their operation. Okay, so now maybe because of pandemic, they have to sell some of their operation. So that is the inherent risk. the future business strategy of the entity, look at to the future business strategy, presence of complex wage structure. Okay, so complex wage structure ni pun also involve to the inherent risk. And information system, computer-based accounting system. Okay, so that's some example that contribute to the inherent risk. So it affects the preparation of the financial statement. So here. Okay, it affects the preparation of the financial statement. So and another risk here is control risk. Okay, where it also comes from the management. So control risk is the risk that a misstatement that occur in at assertion. So at assertion at the preparation of financial statement and could be material individually or when aggregate. So I not explain to you yet what is individual or aggregate just now. So if let's say the nature of the entity, okay, due to the okay, we look at here example here. Inherent risk can also vary from account to account. Balances made up of complex items such as inventory. Okay, inventory is a complex item in a manufacturing company. So in manufacturing company, portable assets in an engineering company and cash balance are generally prone to high level of inherent risk. Okay, why inventory become the item which is prone to high level of inherent risk. Okay, if let's say the company are stop operation, okay, stop operation, they have a lot of unsold inventory. So maybe the inventory will be written down below than the selling price. Okay, so that is one of the situation against the FRS. Okay, so how you value the inventory? Inventory, okay, should be value at lower of cost and NRV. So if let's say the inventory cannot be sold, then the value the inventory lower than the selling price and lower of the cost. So that is not actually allowed under FRS. Okay, but then if the company cannot do anything about the inventory in order to avoid the obsolete inventory, then they have to do that. So that is individually inventory itself, okay, will contribute to the misstatement. Okay, and when we talk about inventory, okay, inventory will be the significant item in financial statement where it arise in the current asset, okay, as well as in the gross profit figure. Okay, so when you look at to the inventory individually or when aggregated to the gross profit, okay, aggregated to the current asset, okay, aggregated to the total asset. So you have to look at it individually or aggregated, secara sendiri ataupun secara terkumpul. Okay, so that is the meaning of individually or when aggregated with other misstatement. Okay, for the control risk will not prevent or detected and corrected on a timely basis by the entity's internal control. So internal control we will look at in terms of the control activities tadi yang you dah letak component of the control activities in terms of the authorization of the document. Okay, in terms of the segregation of duties, in terms of the adequate documents and record. So that's where the internal control does not exist. It will not able to prevent or detect the or corrected misstatement on a timely basis. So that is the meaning of control risk. Okay. Any question on that two risks? Okay, control risk and inherent risk. Ada soalan kelas?
No.
Okay, clear? Yeah, detection risk and inherent risk control risk and then inherent risk. Okay, so now we go to the third risk. Okay, that is detection risk. Okay, actually what is the detection risk? This aspect of audit risk is known as detection risk. Is the auditor's procedures. Okay, auditor's procedures is the 8 audit procedure that you have listed just now. Okay, the 8 audit procedures that you have listed just now. Okay, where you have okay, tu ada tadi. Okay, the 8 audit procedures. Where you put it? Okay, this one. Right. You have inspection of asset, inspection of documentation, observation, inquiry, external confirmation, recalculation, reperformance, and ethical procedure. So these are 8 audit procedures that choose by the auditor to perform the audit test. Okay, to perform the audit test in order to achieve the account balance objective or transaction objective. So katalah tadi on inventory. So inventory, okay, they have a misstatement in inventory. So what should they do, okay, on the inventory? Inventory might be appear under, can you see the, what I'm talking here? Class?
Yes.
Can you see the recap past lesson slide just now?
Yes.
Yeah, okay, good. So, assertion, okay, so now, katalah tadi kita dah identify the inventory is one of the material misstatement. So, auditor need to choose from this audit procedure. Okay, katalah dia nak buat audit procedure, okay, in terms of the on the inventory. Okay, inspection of document. Okay, inspection of document. So dia nak check document apa. So maybe invoice. Okay. So the audit test, okay, will look at in terms of the completeness. Okay, completeness of the invoice. So that should be come under completeness under transaction. Sebab dia melibatkan invoice. So that is the meaning of audit procedures here. Must be able to achieve the audit objective here. So katalah you salah pilih procedures, then you will not able to achieve the objective. So if let's say you are going to achieve the completeness objective, okay, completeness objective, you have to look at to the document and record. Okay, but okay, in terms of the inventory tadi, you nak check on the completeness of the transaction of inventory, but you choose the wrong procedures. Sepatutnya you pilih inspection of document, okay, tapi you buat inquiry. So that is the meaning of wrong audit procedures. Okay, wrong audit procedures. Yeah. So when the auditor, okay, when the auditor okay, highlight pula. Okay, when the auditor's procedure will not detect a misstatement that exists in an assertion level. So tadi macam tadi, okay, your wrong procedures will not able to detect a misstatement that exists in an assertion that could be material individually or when aggregated with other misstatements. So that is considered as auditor's failure. Okay, do you understand? Understand not? Okay or not, class? from the 3 risk study, okay, you have the inherent risk, control risk, and detection risk. So this detection risk is the auditor's procedure. Auditor's procedure auditor's procedure unable to detect the material misstatement. So who control the detection risk? The auditor. Okay. Okay or not, class?
Okay, madam.
Okay. So, and what others contribution to the detection risk? Okay, detection risk is the component of audit risk that the auditor have a degree of control. So auditor have a degree of control because if risk is too high to be tolerated, the auditor can carry out more work to reduce the aspect of audit risk. So as what we have discussed before lah, if the maturity level is low, so auditor have to gather more audit evidence. So when they gather more audit evidence, they have to increase audit tests. And also, okay, the detection risk has 2 subsets. One is sampling risk, another one is non-sampling risk. So when the auditor, have wrongly chosen, the sample, so here, just now detection risk, detection risk. Okay, detection risk is when the auditor procedures fail to detect a material misstatement. Okay, auditor's procedures fail to detect material misstatement. So they have 2 components here. Okay, when they perform the audit test. Okay, let's example just now when you are doing the physical inspection of the when you do the physical inspection of the documentation. So here, inspection of document based on the sales invoice. You are not going to test all the samples. So because we just do on the basis, what is the basis just now? The basis tadi kan? Basis for reasonable assurance. So this one. So auditor will do not verify every item in the accounting record because it's too time consuming and not effective. So auditor based on reasonable assurance. So what does it mean is auditor do the audit sampling. So when the auditor do the audit sampling, it will involve so auditor to choose the sampling. So when it involves the sampling, so there will incur 2 types of sampling risk. One is sampling risk. One is sampling risk. Another one is called non-sampling risk. When the auditor perform the audit sampling, non-sampling risk. Okay, what does it mean is sampling risk? Sampling risk is the risk that related to the sample chosen. Related to the sample chosen. Okay, this one. is the risk that the auditor's conclusion based on the sample may be different from the conclusion that will be reached if the entire population was subject to same audit procedure. So means that when you perform the sample, katalah daripada sales invoice tadi you may take 10% of the sample. 10%. 10% of the sample. So you reach a conclusion. But actually when you reach conclusion from the 10% of the sample, it is different from if you perform 100% of the population. So that is called sampling risk. Risk due to the incorrect conclusion. Incorrect conclusion because the sample that you are chosen is too small, or because of the sample is not a representative of the population. So that is sampling risk. And for the non-sampling risk pula, non-sampling risk is you misinterpreted of the audit evidence. So this non-sampling risk is not due to the sample, not because of the sample. Because of the inappropriate audit procedures from the sample. Sample dah betul. Tapi you choose wrong audit procedures, make your procedures not correct. So that is non-sampling risk. Sampling sample is not correct. Or because of sample is too small. Or the you choose the wrong sample as from the population. But for the non-sampling risk, the sample is correct. The sample is enough, but you choose the wrong audit procedures. Macam tadilah sepatutnya you buat inspection of document, tapi actually you buat inquiry to the management. Or confirmation to the management. That is wrong. So, do you clear about the detection risk? This one. Sampling risk. So, non-sampling risk is the risk that the auditor reach an erroneous conclusion for any reason not related to sampling risk. For example, the use of inappropriate audit procedure or misinterpretation of audit evidence. So, as overall, we can say that all the audit risks just now can be represented by audit risk model. So, this is the audit risk model. The risk equals to inherent risk time control risk time detection risk. How you read this? The audit risk model. The audit risk model. The implication of this for the auditor is that if the inherent risk and control risk are relatively high, then the amount of work carried out to reduce detection risk will be to increase to reduce audit risk as a whole to an acceptable low level. So what does it mean in this situation? So when you set the audit audit risk, I want to ask you, if you when you are an auditor, do you want to set audit risk at a low level or high level? Class.
Low.
Okay, low level. Yes, you must always set your audit risk at low level. So as a whole to an acceptably low level. Okay, in this situation, okay, if let's say inherent risk and control risk is high, so you have to reduce your detection risk to low level in order to set your audit risk at an acceptably low level. Okay, so let's go to the example. Okay, assume that an auditor is prepared to accept 5% chance that they may have given an inappropriate audit opinion, okay, of the financial statement. So now the audit risk set at 5%. Okay, audit risk set at 5%. So from his assessment of the client's risk environment, so they have understand the client risk environment, the auditor has determined the inherent risk factor to be 80%. Okay, inherent risk 80%. And the control risk factor for a given area is to be 25%. Okay, so just put in the formula detection risk equals to, so now you have to find detection risk. Okay, because you want to plan what is the extent of audit procedure that you have to do, okay, when you do the audit planning later. Okay, so you have to set a level, okay, of audit procedure. Okay, in order for you, okay, whether to have high detection risk or low detection risk. Okay, so look at to the formula. Detection risk, you kena cari detection risk. So audit risk, so you just change the formula. Okay, you get this formula. When you change the formula, you get this. Detection risk equal to audit risk divided by inherent risk and control risk. Class, get or not the formula? Okay, audit risk equals to inherent risk times control risk times detection risk. Since I said, okay, inherent risk and control risk, you have to read in one in one statement lah, because it is a combination, okay, risk on the financial statement. So now you have to find detection risk. So you change the formula. Detection risk equals to audit risk divided by inherent risk times with control risk. So now you get your detection risk at 25%. Do you get that 25%? Detection risk at 25%, class? Get or not? Class? Do you have your calculator? Ada ke tidak ni dalam kelas ni?
Dapat, madam.
Okay. So, dapat. Okay. So, that is how you find the detection rate 25%. So, kalau you bawa masuk dalam audit risk model, so audit risk tadi, okay, inherent risk times with control risk times with detection risk. So, audit risk just now you set at 5%, inherent risk 80%, control risk is 25%, then your detection risk is 25%. Okay, so if you look at here, inherent risk and control risk is high, so you have to set a low level of detection risk in order for you to put your audit risk percentage as at the acceptably low level. Okay, so that is the meaning. Same also when you change. Okay, assume that the auditor has assessed control risk at 12.5%. So half, they reduce half, 12.5%. Now your detection risk become 50%. So when you reduce to half here, 12.5%, so dia akan jadi 50%. Okay, 50% here. So what does it mean? Okay, what does it mean? Okay, the detection risk has an inverse relationship with the risk of material misstatement. Okay, the lower the risk of material misstatement, the higher the level of detection risk which can be accepted, and therefore the lower the level of detailed testing is required. The lower the level of details testing required. So this is the extent of audit procedure. You nak buat nanti dalam audit planning. Okay, so maksudnya when you know that the inherent risk and control risk is high, so you have to set a low detection risk. When you set a low detection risk, you have to gather more audit tests. Okay, you have to perform more audit tests. Okay, means that you have to gather more audit evidence. So that is the meaning of inverse relationship. Okay, any question on that inverse relationship? Ada soalan? Okay, go to the question. So the audit partner has set the overall level of audit risk, okay, for the client at 5%. Your risk assessment of the client has indicated that inherent risk 90%, control risk is 50%. So what are level of detection risk should be prescribed for this client? Okay, do you get 11.1%? Okay, calculate now. Do you get 11.1%? Get or not?
Yes.
Yes. Okay, good. So detection risk level now 11.1%. So when you put in the formula here, okay, audit risk equals to inherent risk times control risk times detection risk. So inherent risk just now given 90%. Control risk 50%. Now detection risk is 11.1%. Make your audit risk to the acceptably low level to 5%. Okay. So I want to ask Mimi Farhana, can you explain to me the relationship? Mimi.
Yes, madam.
Mimi, can you explain to me the relationship between the component of the audit risk model here? Try. Okay, what is the keyword of the relationship, Mimi? What is the keyword?
Inverse relationship.
Inverse relationship. Okay, good. So now, you explain to class how the inverse relationship arise in this model. So macam mana nak baca relationship, okay, that you said inverse relationship. Okay, ini. Okay, Mimi boleh tak Mimi? Ini boleh tak Umi?
Madam, may I help Mimi?
Okay, Ken. Siapa tu?
Emilia.
Emilia. Okay, Emilia, Ken. Okay.
In this relationship, in this, dia, saya cakap, it happens when the risk of material misstatements arise.
Yeah.
Then the detection risk will get lower. And risk yang besar bagi lah macam tu.
Yes, good. Okay, so, okay, thank you, Emilia. So, risk of material misstatement. So, Emilia raise the word risk of material misstatement here. Okay, risk of material misstatement is when the inherent risk and control risk is high. Okay, detection risk will be low, i.e. 11.1% in order to set the audit risk model at 5% to be acceptably low level. So, Mimi, when you read the audit risk model, okay, you have to put the inherent risk and control risk as the risk of material misstatement. Okay, because this risk is risk due to the financial statement at the assertion level. Okay, at the assertion level means that at the preparation of the financial statement. Okay, and with the detection risk. Detection risk is risk when the auditor perform the audit test. Okay, and the auditor has use the wrong audit procedure. So auditor unable to detect material misstatement. So now the rate of the detection risk is set at low level. So low level means you have to perform more tests and perform together more audit evidence. Okay, so Mimi, can you get the relationship?
Yes, madam.
So and vice versa lah, as Emilia said just now. Okay, so any question you can ask me after this. So I give you break for 30 minutes. So we will see you back at 11. Yeah, class Okay, boleh. So this is actually the tough topic. So but never mind, we you slowly cover it. Okay, you slowly cover it. If you have question, then ask me. Okay.